Things in a state of flux in Venezuela, but apparently the White House wants the U.S. to take control of Venezuela's oil industry and get American companies to revitalize it. Let's get perspective on what this could mean for our energy sector. We're joined by Patrick O'Rourke, Managing Director at ATB Capital Markets. Patrick, thanks for joining us. I know it's an impossible question at this early stage, but what are your thoughts? Is there going to be an impact on our energy sector in the near term at all?
It is early. I would say that, yes, it's very likely that there's going to be an impact, but we have to kind of understand what that impact will be. So first of all, and I think this has probably been highlighted many times over the last few days, the vast majority of our heavy oil is processed in the Midwest that's exported to the US. And most of that cannot be replaced by Venezuelan oil. The oil production that is at risk today is the oil that we ship to the Gulf Coast. And those barrels can be replaced. The Venezuelan crude is very complementary. Today, they export about, call it somewhere in the neighborhood of 600,000 barrels a day to China. That's very similar to the volume we send to the Gulf Coast. If those are redirected in there, that could put a little bit of pressure on the prices that producers receive in that particular market. Now, those barrels, if they come out of the market, the net demand globally for heavy oil doesn't change. And so that gives us an opportunity to maybe move some more barrels and get some better pricing on mechanisms like TMX. But I think it also opens up a broader question. We recently had the MOU that was signed between the Alberta government and the federal government. And it probably puts a little bit more impetus on actually executing on something like that in the medium and longer term. And then if you look at Venezuela itself, if you think about the longer term production growth capabilities, I think there's a lot of question marks that still remain around reserve quality, infrastructure quality, capital that's going to need to be invested, the regulatory regime that's going to be in place. Significant capital needs to go in there. I think that, large super majors are going to want, a pretty clear line of sight on the political regime change and what that means before they're willing to make those commitments. So I don't think it's going to be an immediate production growth to compete with our barrels, but there are some risks, certainly, and we're watching those very, very closely.
You have an interesting point here that we saw lots of takeover speculation in Canada, oil takeovers. We saw some deals, the biggest was Cenovus buying Meg Energy. You think a lot of the prizes, the juiciest companies may already have been taken out?
Well, if you look at the different asset classes in Canada, the oil sands have gone through significant consolidation. We've seen that over the last several years. You spoke to Cenovus and Meg there. There's very few sort of pure play, scalable brownfield or greenfield oil sands assets that are probably ripe for consolidation. One we've talked a lot about is a company like Athabasca, but I think organically that business stands on its own. And then in the Montney, particularly in the condensate-rich fairway, we've seen a significant amount of consolidation over the last 3 years. And so our M&A thesis in 2026 really revolves around finding assets that are very deep in high-quality inventory, not necessarily very short-term free cash flow accretion, but solidifying the inventory perspective. And that's, to be frank, that's been a bit of a headwind in the U.S. for some of those producers as they've seen the quality of the tiering of the future locations sort of degrade as they've harvested their best locations first. And that's where we see the opportunity in Canada to remain as, a high depth inventory, high quality assets are most in favor in our view.
Just to zero in on a couple of stocks, Suncor is an oil sands giant that you're less keen on. I mean, the stock's had an amazing run. Why is that? You have a hold, I believe, on Suncor at your shop.
Yeah, we've got a sector perform on the stock. I think, it's probably outperformed our expectations. So good on them. They've done an excellent job. They had a great operations update yesterday evening, record production, record throughput in the downstream business. So obviously from an operational perspective, they're firing on all cylinders. They've met their, sort of multi-year strategic plan a year ahead of the time frame here. The next key will be they're going to do an investor day on March 31st and sort of laying out the path forward here in terms of replacing what's, sort of a well-known issue in terms of base mine reserve life. I think that, it's fairly clear that they have those assets that they can do that with. But, the capital outlay and the strategic way that they do that is a question mark for investors. So, I would say if you look at it, and we put our outlook out before the news on Venezuela, I would say Suncor is actually somewhat well positioned here, considering the volumes of upgraded crude that they produce, and then the insulation they have through their downstream business.
As a co-owner of the Trans Mountain Pipeline, because I'm a taxpayer, I'm actually thinking of going down to one of the valve houses and keeping an eye on them and giving them some tips. I'm sure they'd appreciate it. But in any case, Trans Mountain Pipeline tolls have been something of a sore point. There's been an effort by the oil patch to bring them down. And you say that if that happens, Cenovus could be a big winner here, and Canadian Natural too.
Yeah, Cenovus and Canadian Natural are both two of the largest shippers on that particular pipe. There is a negotiated toll process that's going on now. We should have some sort of view of how that's going to look by early February. So we're watching that very closely. But any sort of change to the tolling structure there, if tolls do come down, I would say that those two producers are the biggest beneficiaries. And, then there's a knock-on effect to WCS at Hardisty, which is the in-basin pricing, and Cenovus would be well positioned to capture any improvement there.
Patrick, thank you very much indeed, and have a great new year.
Thank you.
Patrick O'Rourke, Managing Director at ATB Capital Markets.